Ready to turn your retirement dreams into reality without draining your savings? Well, get excited because today I've got something extraordinary for you. Ever wondered where you can retire comfortably for less than $1,000 a month? Stick around because I've curated the ultimate list of the top 10 places where you can live like royalty on a budget. But before we dive into these hidden gems, make sure to hit that like button and smash the subscribe for more content like this. Now let's get into it. So, let's break it down. What's investing all about? Picture this. It's like having a little money-making minion that works tirelessly for you, turning your dollars into even more dollars. It's like buying something for $10 today because you're pretty darn sure you can sell it for $20 down the road. But here's the burning question. If you've got less than $11,000 to your name, what should you do? Well, let's keep it real. Traditional investing isn't your ticket to riches just yet. We're talking about buying shares of companies or diving into index funds, which are like a mixed bag of stocks, giving you a slice of the market pie. Think of it as dipping your toes into the vast ocean of investment possibilities. Now let's chat about bonds, the unsung heroes of the investing world. There are two flavors, government bonds and corporate bonds. Picture this. You're lending money to Uncle Sam or your favorite mega corporation, and they're paying you back with a sweet little interest bonus, kind of like a loan with a side of profit. Then there's crypto, the wild child of the investment universe. It's like the rebel cousin at the family reunion, more risky and less tamed than its traditional counterparts. But hold your horses. Why steer clear of these options if you're playing with less than $11,000? Well, let's do the math. Even if you score a 10% return on the S&P 500, that's a mere $100 in a year. So, what's the game plan with your $1,000 stash? It's all about doubling down on high ROI assets that you can control. But hold your horses. This ain't about going all in on the crypto roller coaster hoping to strike gold. Nope. It's about recognizing that $11,000 won't magically morph into a fortune overnight. Sure, there are tales of folks striking it rich with a lucky crypto bet, but for every winner, there are thousands left empty-handed. Instead, focus on the one thing you can control, your skills. Building your skill set is the game changer when you're playing in that under $1,000 league. The return on investment for those skills, it's off the charts. At just $37 a month, the risk is practically non-existent, with potential gains that could skyrocket. Imagine turning that investment into something 10 times, 100 times its initial value. It's a no-brainer, really. But let's say online courses aren't your jam. No problem. Take that first $1,000 and invest it in yourself. Grab a camera, dive into content creation, learn to code. The possibilities are endless. The key is taking charge of your ROI, because once you're calling the shots, you're ready to level up to stage 2. Stage 2 is where the magic happens. You've got some savings, you're pulling in a few grand a month, and you're ready to make that money work for you. Whether you're stashing away every penny or just squirreling away $100 here and there, it's all about building those habits that set the stage for financial success. Compound interest. It's the name of the game here. Sure, becoming a millionaire might sound like a distant dream, but with the power of compound interest on your side, it's well within reach. The key: think long-term. Plan long-term. Act like you're building wealth for generations to come. And hey, if you strike gold faster than expected, those solid habits will ensure you keep that fortune for the long haul. All right, let's lay it all out on the table. Investing isn't rocket science. Stick with it long enough, and you're bound to hit that millionaire mark. But hey, we're all about speeding up the process. Right now, before you dive headfirst into the world of investing, let's hit the brakes and ask ourselves 3 crucial questions. First up, do you have an emergency fund tucked away? We're talking 3 to 6 months worth to cover your essentials. If not, back to the drawing board. Stage 1 is all about boosting that income. Next, let's talk risk. Be real with yourself. How much can you afford to lose? Calculate your expenses, figure out your cushion, and stick to it. No ifs, ands, or buts. Last but not least, set those goals straight. Forget about turning $1,000 into a gold mine overnight. Slow and steady wins the race here. We're talking building solid habits, laying that financial groundwork, and watching your money grow like clockwork. When it comes to investing, rule number 1 is simple. Only put in what you can live without. Seriously, once that cash is in, consider it gone. Trust me, it's the golden rule of compound interest. So, what's on the menu for stage 2? Forget about playing stock market roulette. Instead, we're keeping it painfully simple. Say goodbye to individual stocks. We're going big with the S&P 500 or its UK counterpart, the FTSE 100. It's not a one-time deal. We're talking regular, consistent investments, rain or shine. Now picture this. Every single week, like clockwork, your investments are humming along, automated and hassle-free. It's like magic, right? You don't even have to lift a finger. And trust me, after doing this for years, you might even forget it's happening. But guess what? That's exactly how it should be. Out of sight, out of mind. Your financial future, neatly tucked away, growing steadily in the background. Sure, it might not be the most thrilling investment strategy out there. I mean, let's face it. There are way more exciting ventures like property projects or jumping into companies where you've got a competitive edge. But here's the kicker. Those flashy ventures, they're not your bread and butter. Nope, it's all about laying those solid financial foundations week after week, rain or shine. So, what's the secret sauce here? It's called dollar cost averaging. Simple, right? You just keep buying, regardless of whether the market's up, down, or sideways. Over time, your buy-in price averages out, smoothing out those market fluctuations. Now, why stick to the S&P 500? Simple. Historically, it's been a winner, clocking in over 10% returns. And let's be real here. Very few hedge funds can match that kind of consistency over the long haul. So, even if the market hits a rough patch, you'll be sitting pretty, thanks to the power of compound interest. Take it from me. Even if you're just stashing away a few $100 a month, that consistent effort adds up. I mean, think about it. Start with $300 today, toss in $300 every month, and boom. You're a millionaire in 36 years. Now, sure, that might sound like a lifetime. But trust me, with a little patience and persistence, you'll be hitting that millionaire milestone way sooner than you think. Let's talk numbers. Remember that millionaire milestone we mentioned earlier? Well, buckle up because we're gunning for it way sooner than 36 years. I'm talking 3 to 8 years, folks. Sure, quick cash might sound enticing, but trust me, it's not the way to go. Slow and steady wins the race, my friends. But let's get back to the nitty-gritty. Compound interest. It's the name of the game. Keep plugging away that $300 a month for 40 years and you're looking at a cool $1.6 million in your pocket. But cut that time in half. Well, you're only walking away with a fraction of that. Now let's talk taxes. Nobody likes them, right? But you can actually score some major tax breaks by investing smartly. In the US, there's the Roth IRA, where you can stash away $6,000 a year tax-free. And across the pond in the UK, there's the Stocks and Shares ISA, where you can invest a hefty £20,000 annually, no strings attached. Now on to stage 3. You're still playing the same game as stage 2, but now you're kicking it up a notch. It's all about increasing those investments, baby. Now everyone's got their own comfort level when it comes to money. For some, $100 a week is chump change, while for others, even $50 might feel like a stretch. The key: find that sweet spot where you're investing without even batting an eye. And remember what I said earlier, you are your biggest asset. So focus on beefing up that income, leveling up your career, and diving into skills that'll bring in the big bucks. As you boost your value as an asset, that's when you start diversifying. Keep pouring money into the markets, sure, but now that you've got more dough to play with, you can really start flexing those investment muscles. Now let's talk stage 4. This is where things start to get spicy. You're raking in 5 figures a month, and you've got some extra cash to play around with. And guess what you can afford to take on a bit more risk? Crypto. Anyone, I'll be real with you. I tossed a cool $1 million into Bitcoin and Ethereum back in 2020, and let's just say, it paid off big time. But hey, crypto's not for everyone. These days, I'm more about preserving my wealth with safe, boring investments like grade A properties and fixed income assets. But hey, if you're feeling brave, stage 4 is your time to shine. Start dabbling in individual stocks, do your homework, and pick the winners. If you've got the time and the know-how, go for it. Just remember to dig deep into those company fundamentals before you dive in headfirst. So here we are at stage 5, the big leagues. Now, you're not just dabbling in investments, you're making serious moves. And while you're still doing everything you've been doing in the previous stages, It's time to level up. This is where you can start playing around with crypto and other more volatile assets. Now let me drop some knowledge on you. The richest folks on the planet, they're not making their millions from their day jobs. No, sir. They're raking it in through stock options and equity. Just take a look at Sundar at Alphabet or Reed Hastings at Netflix. Their salaries. A drop in the bucket compared to their total compensation. Equity in businesses, even if it's just a tiny slice, can pay off big time down the line. This is where risk management becomes key. You've already made your millions. Now it's time to diversify your portfolio beyond just stocks and shares. Real estate bonds. Yeah, they're on the table now. And let me tell you, even bonds, boring as they may seem, can be a game changer when it comes to preserving your wealth. Thanks for tuning in to today's video, where we've covered everything from beginner investing concepts to advanced strategies for building wealth. Now, before you go, I want to leave you with one question. Where do you see yourself on your investing journey? If you found value in today's video, don't forget to hit that like button and subscribe to our channel for more insightful content on mastering your finances. Thanks again for watching. Until next time. So hit that like button if you enjoyed today's video, and don't forget to subscribe to our channel for more tips, tricks, and tutorials on how to turn your creative visions into reality. Until next time, keep creating, keep innovating, and never stop dreaming big. See you in the next video.